The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. We're going to start the show looking at Apple because it reached the price objective that we've been waiting for since April 19th. I've posted into Tiger TV the 60-minute chart on Apple going back to January, and you'll see that each time that Apple has rallied, we had a $50 rally in February, we had a $50 rally in March, and we've had a $50 rally just a little over 50. Actually, it rallied $60 this time, and it was in the price zone that we were looking at, somewhere between $440 and $450 a share. It hit right in the middle at $445. So the next thing we would be expecting in Apple now would be a retracement, because each time we've had these moves, they've had a nice retracement, and the retracement that I'm looking at is around $408 a share. Now, that's not going to happen overnight. That's going to take several weeks, just like the bottom that occurred during April 19th. But the important thing to look at, if you get a chance to go into Tiger TV and look at this, it shows the beautiful symmetry of what's happened in the ABCD patterns. It shows the time and price symmetry. They both came together perfectly on April 19th and then gave the perfect rally, just repeating what it had done before. Now, if you have an interest in learning some of this and you're a subscriber to my newsletter, I'm going to do a webinar for my newsletter subscribers on May the 15th at 6:30 Eastern Time. So if you're a subscriber to the newsletter or would like to, if you'll contact TFNN, you can subscribe to that, where I'm going to go over these principles of time and price and how the patterns work and how to use the ratios and proportions of the Fibonacci summation series. So that's something that if you want to increase your interest, that's something that you can certainly do. Now, the next thing I think that we should take a look at is the overall stock market, where we are in the S&P, because we have we've been ratcheting up little by little, trying to make some type of a top in here. And believe me, I really think it's a major top. But we are doing pretty much the same thing that all these things are the same. In other words, if you're looking at Apple or the euro or the Japanese yen or the S&P 500, all these stocks look alike, folks. That's what they really do. Now, I'm going to post into Tiger TV the chart of the E-mini S&P that's going over the last 7 days since last week, last Wednesday, and as you can see, it's been going up in ABCD type format. And what's interesting is the correction that we had today was exactly the same correction that we had 2 days ago on April the 29th. The market went up to 1592, dropped 10 points down into 1582, rallied to the 1.27, which was 12 points higher, up to the 1595. And now it's made its first correction. The reason why this one is important is because if this correction that we're having right now, the one that we had our low earlier in the day, we made a 382 retracement so far today up at this 1588 level, and if that fails, we have a much lower price level. So if we make new lows on the day now, that is going to change the whole scenario of what's happening to the S&P over, a short time frame. Longer term, it still looks like it's, making some type of a major top, but, it just keeps ratcheting higher. There's no indication, that there's something out here other than the fact that there's so many people that are bullish. There's a few bears around, but it is still looking, very, very toppy. The New York Stock Exchange Index has taken out the high. The NASDAQ has taken out the recent highs that we've had, but it still, doesn't look very good on a long-term chart. We've talked about this one and showed it into Tiger TV, that this level around 2,900 and change in the NASDAQ is very, very critical, and we'll see. But the pattern is a three-drive pattern that is happening in all of these things, and that's usually a negative pattern. It's just that it hasn't turned down yet. But the key today to watch, and it might even happen while we're on the air, but if we go below this 1581 level in the S&P 500, that would tell us that we're most probably getting ready to have a situation where we're going to have a pretty serious correction. And a serious correction in this type of bull market is nothing more than 3 to 5 days down, because you don't get those down days very much. I mean, every time the market has backed off, it stopped, exactly, where it was supposed to be, and that's an important thing to look at. Now, one of the things that we've been anticipating that is getting ready to have a big move, which tells us the stock market is getting rather toppy, is the VIX index. These are the three things that Basil talks about are his three dollies. The stocks, the bonds, and the VIX. Well, I like those too. I don't call them three dollies, but they're three very, very important things. And what's happening now in the VIX index is something unusual, because we're having higher bottoms as the stock market's making new highs, and that tells us that we're looking at the. Someone said I should call it the three bears. Yeah, that would be a good one. The trouble is I never did find Goldilocks, so I don't know where I am in the forest. But what we're looking at here is three higher bottoms now in the VIX index, as the index themselves, the New York Stock Exchange index and the Dow Jones and the NASDAQ are all making new highs. The VIX index tells us that there's something amiss, because the VIX should be going to new lows if that is actually the case. So there are some people out there that have a fear mechanism built into them, and they're being a little more careful than the general public, in my opinion, just looking at it. So we need to watch that very, very closely. Now, the next one that I wanted to talk about, which I believe is this is the one that I've been talking about for a very, very long time, and that is the bond market. And we are very, very close. We're very close to the number that I've been waiting for. We're only about 12 pips away now in the bond market of making the 786 retracement, coming in and around the 150 level in the Treasury bonds. And this one has got some real serious things in it, folks, because I want to spend a moment talking to you about the high-yield bond market and what's happening there, because we're having a real divergence here. In other words, people are scrambling for the high-yield market like never before. It's making new highs from August. This would put the Treasury bond at the 155 level if it were following along with what the high-yield bond is. I'm going to put that into Tiger TV and show you what this is the iShares that I'm looking at, and it shows you what it's doing. It's just making a perfect 1.27 today, up at that 95.56 level, and that would be a very low-risk selling opportunity in my opinion. But what I wanted to do is to take just a moment and show you what happens when you overlay, in other words, do a comparative chart between the 30-year bond and what's happening with the iShares. In other words, how the clamoring for yield is coming in. And I'm going to put that into Tiger TV, and you're going to see that we're making new highs in junk bonds, and the 30-year Treasury bond is only making a 786 retracement, and we're making a 61% retracement in the notes. So we're very, very, very close to, I think, something really dramatic coming into this market, especially in the high-yield market, because that market, people are clamoring for bonds. It goes back to one of my favorite quotes by Bernard Baruch. Don't be concerned on the return on your money. Be concerned on the return of your money. That's far, far, more important. So what I'm looking at is a potential short up here at the 150 level in the Treasury bonds, and I would be selling the high-yield bonds, the HYG. I would be selling that ETF for that short today. I can't really say that because I don't understand these ETFs very much, and shorting them, may not be the way to go, because if your broker can't get the shares for the short side, you're out of luck. So I don't want to make that recommendation. I'm just telling you that high-yield market should be under some trouble, at this particular time. So just keep that in mind, that's what's really happening. But the red line that you see on the chart is comparing the high yield to the 30-year bond. The red line is the 30-year bond. Now, someone asked a question about TBT. That's the ETF for the Treasury bond, and if you give me a second, I'll be happy to pull that up and take a look at it. I'll have to get the data refreshed because they've split this thing, and I have to change the. There we go. Oh dear, I can't get it to. It's got the split stuff in it, and I can't. Give me a second here, and I'll see if I can get this done correctly. Oh dear. There we go. Well, we're just going back and testing the lows from November, and because there's a difference between the two, we're making a 786 retracement in the Treasury bonds. And if you wanted to do the TBT, what I would do is I would not look at the TBT until it gets about a half a point lower, down to about 58 to 57.50, somewhere in that level. That would be a 1.27 expansion, and that would be equivalent to the bonds getting up to the 150 level. Another way of doing it, and I think it is the smarter way, is to wait for the bonds to hit the 150 if they're going to make that, and then go in and buy the TBT, and then just risk 2%, which is roughly $2 a share, and that should keep you in the ball game, because 2%, anytime you risk 2% or less, you have a pretty good chance of success in this business, because success is staying in the game. It's not about how much money you win, it's about how much money you don't lose. And this is what happens with younger traders, is they come in thinking, and some people come in with a lot of money in these markets, doctors and lawyers and dentists and other people, other professionals, internet people. They come into these markets with a lot of money thinking they're going to be able to take a lot of money out of it, and that's not, really what's happening. I'm unable to post the TBT chart, folks, because it just doesn't have the correct data because of the split that went on about 4 months ago. And I haven't updated that because I really don't do anything in ETFs, and I haven't been able to do it. But I can tell you from the short-term daily that the level of around 57.50, it should be pretty strong support in the TBT. So that's basically, what we're looking at. I was talking just a second ago about, people that just throw money at these markets, and money is not what makes you profitable in these markets, folks. Capital is your least important thing of trading. The important thing is to have the knowledge first and then go back. And the reason why that's great proof is the people that have come into this business, i.e. me included, that have lost a couple of fortunes along the way, yet still, were able to come back, and that's basically because, we were gaining knowledge along the way. And you don't need a lot of capital to make money in these markets. A perfect example of that is, what's happened in gold recently. Once it broke 1565, it was a $20,000 move straight down to 1322, and that's it. We got to take a break, and when we get back, we want to cover gold.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we've got a caller from British Columbia. Our friend Rick. Rick, are you there?
Hey, how you doing today, Larry?
I'm good, sir. How are you? What can I do for you?
Well, I'm just shutting you off on the internet so I don't screw things up here. I'd like to look at oil. And with that in mind, I'd like to look at PSX. But first, let's just look at oil.
Just crude oil in itself.
Yeah. From what I'm seeing, we came down hard last week, or 2 weeks ago, whenever we just came down here.
That was into April the 15th. There was something really big happening at that time, that brought us down to the, longer-term 61% retracement. I'll post that in so you can take a look at it, of course. But what was the question that you had?
Well, I just think I see oil going down to about 75, and
I do too. Yeah.
You too?
Yeah. It's first of all, we're having lower tops. That's the real key here to look at. I'll bring this into Tiger TV so you can take a look at it. But we're not going to make the level of $100 a barrel. We got to 98 and change, and so that sets up a much lower price down here at around the 79 level. That's the way I see it.
Now,
and,
Larry, you had mentioned head and shoulder patterns on Newmont. I think it was you or somebody had mentioned.
Yeah, that was me. I looked at head and shoulders quite a bit.
Well, if you can just put the oil on for 2.5 months, 3 months, let's say.
Yes.
And you'll see we had a head and shoulder pattern, and that targeted right exactly where we were supposed to go. And what head and shoulder patterns do is you go back to the neckline, or at least don't break the shoulder, and that's exactly what we did. and now we're on our way down. And I mean, there's huge volume down at the lows, but I see a lot lower. And if you've just got the time, I was wondering if you could look at ticker symbol PSX, which is the best.
PFX?
P is in Peter, Stan is in S is in Stan, X is in X-ray.
PSX. Okay. Yeah, sure. I can take a look at that. That's not a problem. But the oil is, the important thing is that after we made that low at 85 a couple of weeks ago on the 19th, we rallied right up to the 61% retracement around 94 a barrel, and we've given it in 2 days. We've given 6% of that contract value back right away. That's not a good sign.
Oh,
if it's
we're
really
down
bullish.
And we're down today too.
Yeah, that's another thing that's telling you now. PSX, I'll have to add that, and hopefully I'll be able to pull the data up. I have data source for everything. The problem is how long it takes to add. This is not going to take very long, thank goodness, and I'll be able to put it in.
Yeah.
You're in Vancouver, right?
I'm north of Vancouver, about 500 miles as the crow flies. I'm actually straight east of the tip of the Alaska Panhandle, inland about 100 miles.
Oh wow,
we're big. We got big. Like my son was just up on a very rich gold mine. He's coming back Thursday.
Is he going to send me some samples?
Well, believe it or not, it's the second richest assay results, but it's only veins. But still, we're talking 1,000 ounces per ton. There's a guy that's mining up there. It's been doing it for 35 years. It's specialty mining. They have to fly in. There's no road, and then they put all their ore from the veins in these big sacks, and the choppers take them out. Like, it's very rich. This is not a Bre-X. Remember Bre-X. This is not a Bre-X. But if you have, it's called Phillips 66, and I don't know if it's a pure oil play or not, but I believe it is. And it has a perfect head and shoulder pattern that takes it down to $50.
Oh, I just posted that into Tiger TV. I can see that very easily. It's got a beautiful head and shoulders, and it made the three-drive pattern at the high up around around April 1st at that 70 level, and it certainly looks like 50 looks like where it wants to go.
Exactly. And I mean, if a person were trading it, if you were to buy it just a hair above 50 and don't really give it much room, you could get a bounce. You know how these oil stocks bounce? I mean, they go fast and hard.
They don't do it anymore.
Yeah. But anyway, you could get a bounce all the way to 60, which is a neckline. I mean, that's normally how head and shoulder patterns work, right?
That's correct. That's exactly right.
But anyway, I just thought I'd mention to you that PSX, and in future shows, maybe write that down, and if you don't mind, just follow that one. And if you think there's a better bellwether for oil stocks, great,
I'm going to leave that responsibility to you, my friend, because that way I won't have to have any
I'll do that. I'll be phoning you.
that I've forgotten something. So when you see it, you want to talk about it, give me a call.
When it gets down to 50,
we're looking at it at around $48 a share, it looks like to me, $48, $49.
Exactly.
Oh, we got to take a little break here, Rick. Thanks again for calling in.
Thank you.
You bet, my friend.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I've posted into Tiger TV the 30-year bond, the June contract, and what we're looking at, it's a 60-minute chart, and it shows the patterns and what we're looking for. We have already exceeded the 1.27 expansion of the last move, and that's mainly because we exploded out of the bottom down there at that 148 level. That was a very, very strong support right at the 50, well, actually 61%. It missed the 618 by 3 ticks. But the important thing about this chart, it shows the three bottoms that occurred back on the 22nd, the 24th, and the 25th of April, because we were talking about those. You know, we've been waiting for this 150 level in the Treasury bonds for some time, so that's what we're looking for. If you do have an interest and you want to learn some of these things, if you're a subscriber to my newsletter, I'm going to do a webinar on May the 15th at 6:30 p.m. for those that subscribe to the newsletter, where we go over some of these different techniques that I use. And these are techniques that have been around for a while. I've just refined them a little bit, by using the ratios and proportions of the Fib series, and that's really what I try to do, is to narrow it down so that you don't have to risk very much when you're doing something. That's the primary thing that you want to keep in mind. It's about how much money you have at risk, not how much money that you're going to make. Now, this next chart that we're going to get into gold and silver right now, because I really think this is the this is going to be a big play here eventually. Well, it's been a big play already, but after we made that 3 drive to a bottom down at the 1322 level, we were looking for around 1340 to 1365, and the market went a little bit lower during the big sell-off. But since that time, that was on the 15th of April, since that time, the market was able to rally, and if you go into Tiger TV and look at it, it made a beautiful ABCD pattern, culminating at the 1480 level. We talked about that last week, and since that time, we have been, going sideways except for today, and today's the biggest, correction that we've had other than the one that we had on the 18th of April. So what's that telling us is that we want to be looking at gold for 3 levels. The 3 levels you want to look at are the 1424, which is the 382. And the reason why that's important this time is that we made a high on the 25th, and this is the 1st of May. So it's been a week, and the market has been basically haven't given anything up until the last several hours. The last 10 hours or so, it's given up quite a bit. So we would be looking for a minimum of 1424. That would be the 382. And then we would look at the 61% retracement at 1384. Anything below 1360, gold is in such trouble you don't even want to think about it, because this has been a very, very bearish market. It's had a really good snapback, and it came back very quickly, from the 15th of April to the 25th. In 10 days, it rallied over $160 an ounce in just a short period of time. So that tells us that there still has, some potential bullishness in the gold. It's a great trading vehicle. I mean, guys, looking at the smaller term patterns on gold is, really quite a lot of fun. But, the daily is more difficult because you have to risk so much. Tomorrow on the commodity show, I'm going to go over the margins on these things to show you, the difference and how the margins are calculated, by the Chicago Mercantile Exchange. These are exchange margins, the ones that the exchange tells the clearing members that they must use. They have some leeway, of course, based on the customers and other things, but it's really based on the exchange itself. The bad part is it's overseen by the CFTC and the NFA, and they missed a lot of things the last few years, but maybe they'll get a little better at watching what's happening. Now, the next chart that I wanted to put up is the silver chart over the gold chart, and as you can see, silver is already at the 61% retracement of that move. In other words, the low we had in silver at around $22.50, it rallied up to $25, and now it's made a 61% retracement at the level of $23.20. I think what I'll do is I'll draw this in so that you'll be able to see it a little better, because we are actually completing that right now in the silver, but gold is still well over $40 away from where we want to look at it. Now, if something makes gold take off to the upside from here, in other words, it doesn't make a 382 retracement, this is really going to tell us that low that we made in 1322, that big ABCD on the weekly in the gold market, that's the one that we were watching. That means that is really, really an important low in gold, and that could be the one that takes us to $2,500 an ounce. And I don't know if that's going to happen or not, but the way that it did it, and the fact that it took $160 of its down move back in 10 days, is really a very powerful statement, in my opinion. So we want to watch this, very, very closely. Remember, silver is more of an industrial metal than it is a precious metal. It's the poor man's gold, is what we've always referred to it as. But that's basically the main thing. I get a side story here. Had an interesting call yesterday. One of the coin dealers that I did a lot of bullion business with in California gave me a call yesterday, and his son is going to the Kentucky Derby. He's a part owner in one of the horses called Golden Sense. He's a 7-to-1 shot. He's the third favorite to be in the Derby after Verrazano, but the young man has a 1% interest in the horse. And, of course, if the horse wins, that 1% would be worth somewhere between $100,000 and $200,000. So, well, everybody give it a little rooting for Golden Sense. I always bet on the Kentucky Derby. I have since I was about 7 when I used to go with my grandfather down to Louisville. And but it's a fun race, and I always like to watch the Triple Crown races just because horses at that level are so spectacular. It's just really a lot of fun to watch them run. Anyway, that's about it. I do have the winner of the Derby, but I don't want to tell anyone because it would affect the odds, and so I'm not going to reveal that winner. I will reveal the winner on my Monday show, though. I promise that I will do that. Okay. Now we've talked about gold, we've talked about silver. Now we've got a situation on that we've been talking about for several days now, and that is with the Japanese stock market. We talked about that because we were looking to sell the. I'm going to put this in here to Tiger TV, the Nikkei Dow, and what we were doing is we were looking to sell the Nikkei Dow up at the 61% retracement that it hit, which was 13,980. Now we're trading about 300 or 400 points below that. But what we were doing is we were basing this on, and I have to put this overlay chart in so you can see the difference between what's happening with the currency and what's happening with the actual Nikkei. The Nikkei is just too thin, to really trade, and the other thing is it trades, really weird, early in the morning and stuff, and it's not something that I think is, worthy of looking at. I'm trying to get this so that it overlays, and you'll see that the correlation in this thing is about. Just give me a second here, and I'll move this up. Here we are. I'm going to just bring it in really close so that you can see how the correlation on the Japanese yen versus the Nikkei Dow is about 95%, and that's what we were looking at, and that's what's happened. And if you'll notice on the Tiger TV that the yen has actually rolled over from that par level. That's what we were looking at, very, very closely. And so I want to bring that up and just give you an idea of where we stand with that trade, because it's doing exactly what we wanted it to do, and you'll be able to see the double top that we have here in the Japanese yen, and on yesterday's show we talked about it making the 61% retracement down at 97.5, and now if we go below 97.5, then they have a situation where we have a move down to the level of I think we're going to 90 is what I think. I think we're going to have a $10,000 move from par down to about 90, which is a 382 retracement. And that's really what we're looking at. So someone asked me a question, has there ever been a horse named Fibonacci? I know of one, and horses can't be named the same thing, so I do know of one. He was a horse from New Jersey, and he did win that day, but he was a favorite. I think he was 3-1. I don't remember his lineage or his sires or his mom and daddy or anything like that, but I used to know all that stuff when I was in California at Drexel, because we went to the track 3 days a week because Drexel owned boxes, and they were never, at Santa Anita and Hollywood Park, and the only people that could use them were the people that left early. They got there by 1 o'clock, and that was the commodity people, because we closed at noon. We don't have to work all night like we do now. This is they should have told me this when I was 30 or 40, not when I'm 70. That's not fair, but it's still fun. What are you going to do? Way to make a living. Anyway, this is what we're watching. The Japanese yen, we were looking at it at 99.40. It's now trading at 97.24. We're looking at a price objective of potentially $90 a share. That $90 to the U.S. dollar. So that's what we're watching. Now, whether that's going to happen or not, we don't know, but we want to lower our stop down so we guarantee at least $1,000 on our last third, because we took a third off at 97.40. That was the first Garley, and now we wait. The last two-thirds will either take off at 98.50 being stopped out, or we're going to take another third off at 96.5, and then we'll take the last one off at 91.5. That's the one you try to let ride if you get it right. You don't get it right all the time, but once in a while you do, and that's what you're looking at to try to to see what we're watching. So we've covered the gold, we've covered the silver. We're at major points in the gold, folks. We hit that 1480. If we get above 1480 an ounce and close strongly above that, that's going to be a huge move in gold, because silver has backed off. Gold has not. Gold is actually, it's holding its own. I know it's down $40 from its high, but that's really, really not very much. Now, we want to get to talk about the U.S. dollar, because I really think this is where we are This is, King Dollar is our leader. Tom O'Brien has given it, but it's done exactly what we wanted to. We made a perfect Gartley pattern today. I mean, this means the euro and these other things, especially the euro, because the euro is 63% of the dollar. But I'm going to draw it in so that you can see it, very vividly, because we've made a beautiful ABCD right at just a little above the 382 retracement. And if the dollar can hold this level, and this is what we talked about, that 81.25 level, that means that it's made a perfect Gartley pattern at that level. We made a beautiful ABCD that started back in April. So it's taken 1 month for it to form. It's formed perfectly, the number of days up, the number of days down. I'm going to do that for us now so we can do this like what we did with Apple. These are the things that I'm going to be doing on the webinar that I'll be doing, and I want to show you the time. In other words, if we take from the high that we made in the U.S. dollar, back in March, and move it over, and all we're going to do is just to look to see how much the market could come down to, and that will give us the time that we're looking at. And that means it's going to be on Friday or Monday, folks. We'll be looking at the U.S. dollar to bottom on either Friday or Monday, and it should come in somewhere between 81.35 and 80.67. That's really what we're looking at. We got a call from our friend in Philadelphia. John, are you there?
Hey, Larry, I'm joining you this afternoon at the track.
Hey, I wish I could go. We have a dog track here in Tucson, but no one ever goes to it. So I don't like dogs racing anyway. I just watch the Triple Crown, John. That's all I do. What can I do for you, my friend?
I'm not picky. I just want you to know.
I know that.
Larry, I wanted to ask you to look at today and examine more closely tomorrow, if you could, gasoline futures. I just posted into the Tiger's Den the weekly charts going back 3 years of the gasoline futures contract. It's come down. It's currently trading at $2.70. And I have a suspicion you'd be looking in the direction of the buy side sometime soon. That's where I'm looking and wanted to get your thoughts. Sure.
Not a problem. This is one of the ones that we always, well, not always, but we cover it quite a bit in the on the commodity show that I do tomorrow every Thursday between 12 and 1. I always do that. But the only difference here, John, if we go much below where we are now, we're going to be breaking below that 786. This is held like golden right here at this 270 level. But the problem I see with this, John, and I'll post this into, I've got to get rid of some of these little markings that I have. They're not secret markings, but I mark the ABCD patterns on these things, and I don't want them to confuse everybody. So I'm going to take all that stuff off, and then we'll just look at the chart itself. There we go, and you'll be able to see the this really wide-ranging bar. I mean, gasoline's got hit 10 cents a gallon today. That, as you and I both know, that's a lot of money. So it has to stay above the 270. And longer term, let's take a look at it longer term, John, because on the weekly it might be giving us the weekly tells us a lot bigger, more information because, we have had a heck of a run. The actual number to look at is 250, but I'll put the long-term weekly chart for gasoline futures in here. And what I'll do tomorrow, John, is I will focus on gasoline and oil and heating oil because I think we're getting to be at very intense levels in these. But that's really what we're looking to do.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Show with the U.S. dollar and foreign exchange, because that's what moves all these markets, is the money that goes through the Forex markets. Basically, I posted the chart in for the euro, and it shows, we're making a 50% retracement off that last high. The second one that I posted into Tiger TV was the British pound, and that to me is the one that offers the safest of the risk-reward ratios, because we've just made a 50% retracement with the British pound up at this 156 level. We're trading 155.80 right now, so I would be looking at this as a potential short in this area right here. We've made two beautiful A, B, C, D patterns on the way up here. It's a perfect 50% retracement off the high that was back in 163.50 level, and so keep that in mind. The other thing is, if you'll take a second to look at the British pound here, you'll notice that it made a new high on right around Christmas time, taking out the highs from September, and then immediately reversed, and that's basically a function of major selling coming in. Of course it is, but the reason why is that the 163.50 level just happens to be a longer term price level going back on the weeklies, and that's why when you look at these and you're watching new highs being made, you've got to go back to a longer time frame, to verify that's really where you are. So that's the main thing. So keep an eye on this British pound. The yen has already topped. We believe that happened back at the 94. 30 to 40 level last week, and so that seems to be in vogue. we want to be looking at Apple to be a buyer around $408 a share. We're still in a downtrend in Apple because all of the moves that we had in Apple were perfectly equal within $5 or $10, within $5. They were either $50, $55, or $60 on the rally, so they were all about the same. They all took about the same time to complete, and if Apple should go below the 385 level now, that sets up another price objective down around the 350 level. So we really need to see what happens to Apple over these next few days, and we just follow it just because of the technical things that we have. And I'll give my one more thing for the webinar on May 15th. I'm going to do a webinar for my newsletter subscribers where I go over some of these things and go over some of the trades that I'm actually in and setting up at that particular time, so you can, walk through the thought process of, how I come up with, some of these numbers, because I'm just looking at numbers. If you can add, subtract, multiply, and divide, and, don't damage yourself, you can trade. That's the bottom line, because this is not rocket science. We're not trying to put a satellite on or a landing craft on the moon or Venus or anything like that. We're just trying to get an edge to see if we can, be right better than 6 out of 10 times and make $1.5 for every dollar you risk. That's the the basis of what we're watching. The key thing to watch in the stock market is this 1580 level. And if it goes below that in the S&P, it'll probably go lower. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.